All right, everybody. Stocks by the numbers. Welcome back. Let's get into it. Name of the company I'm looking at today is The Honest Company Incorporated. Ticker symbol HNST, listed here on the NASDAQ. Stock is a touch below $3 a share. It's at $2.90. It's down 2 cents right now, about 0.5% here on the day. Looks like on the technical side, the stock had a really nice rally after getting beaten up all the way down to new lows of $1.06. I think the IPO came out. IPO price was about $20 a share, so down about 95% from the get-go, and then really made a nice rebound here, almost back up to 5. Looks like it dropped down, consolidated into this descending wedge, and then we recently had a pop out. So we had some technicals lining up, but also at the same time, a couple of days ago, as you see, shares rise after upgrade from Loop Capital. And we can see Loop Capital upgraded the stock to a buy from a hold back in April, just 1 quarter ago after last earnings. They lowered their price target from 5 to 3, I believe, and they put it a hold rating. Now you can see they upgraded the stock from hold to buy, but they maintained the $3 price target, but basically popped out of the wedge recently. So just a little recap here. What this company does, as we see, provides non-toxic natural baby products online, offers diapers, wipes, bath, skincare, home cleaning, health, and wellness products. The revenue has been pretty steady if we look at some of these numbers here, slowly climbing up about $1 million or two and change quarter over quarter, going from the low 80s to the high 80s up to above 90.25 million here 2 quarters ago. And now we can see last quarter we had a slight dip back down to about 86.2, but if we compare that with the year before, you can see they were at 83.8. Also, they've been getting the profitability side much more in line here. And that's what I think is really driving the growth. Because if we come back here, we can see that the big sell-offs took place, and you can see that the profitability side was the issue. We have a miss here on the top and bottom line, and then you can see the revenue starts to come in steadily above estimates, but the EPS side, the losses were still wider than Wall Street was expecting. Look at this, consistently beating on the revenue side, but also consistently missing on the EPS side. That is what, in my opinion, really drove down the price of this stock. Is a good beat right there on the revenue side. And you can see that the revenue has been consistent. The EPS was the issue, right? So we bring it all the way down to $1 and change. Then the rebound starts to happen right at the tail end of 23 going into 24. And we can see that the EPS has now turned around. We have a beat on the EPS, big beat on the EPS, big beat on the EPS. So now that's 3 quarters in a row. And if we look more importantly, when the initial big drop started to take place, you can see a gap down here. This was on earnings of March 16th, 2023. We can see the stock was at about 2 3/4 and then gap down here to a high, again, top left of the screen, the O, the H, the L, the C. That is the open, the high, the low, the close. You can see the high, 246. So we went from about 270 down to 246. And then you can see that as the stock started to climb back up, that's where it stopped and tried to fight and tried to reject, but it was just too much positivity and helped pump the stock up. Then, after the big run up here of about 5, you can see they consolidated it down, brought it down into the wedge, and where's it go? What happened? Look, bounces off of that key level here of that gap fill at 246, 2 different occasions, forms a bear hammer as we approach the apex. We open at 255 here, flash crash down below the line, and then you can see, look, this was the 24th. Let me show you. Here we go on the 24th, right as markets open. You can see we open high, we dip down, we fight to hold that 246 line, break down below it at the bottom of the wedge, and then immediately bounce above it and gain big momentum and basically go back to where we opened on that day of the 24th. So in my opinion, that was a key level for the stock to reclaim, and it did. And then, of course, again, we popped out of the wedge. We had the catalyst with the buy rating upgrade. But also, more importantly, in my opinion, just in general, I'm looking for this level right here. You can see this spike up before we started to get that sell-off taking place throughout 2023. And we can see the high on this candle right here is 3 3/4. That's 375. That's right here. And then this fib level right here at 393. In my opinion, personally, I think that's where the stock is going. We had the big spike up here, potential flagging, and now we're kind of dropping up and down here. So that's why I think we might bounce and stay above this 20-day moving average with a little consolidation flag here. And then I think the stock is going to pop up and out, and we're going to go back to the mid and high 3s, in my opinion. And I also think that the numbers support it as well. And if we just look at the annual revenue coming in, we can see slow and steady wins the race. We had a slight dip in revenue down there in 22. You can see the company suffered some losses there of about 49 million for the year, and then we have a nice bounce back here at 344.7 million for the year. Still negative for 23, but we saw that the tail end of 23 going into 24 is when the profitability side turned around. And if we look at the last couple of quarters, we can see net margin back here minus 22% a year ago, now minus 1.4%. And we can also see that we had net income positivity when we broke above 90 million roughly 2 quarters ago. So in my opinion, I think the stock is in the rebound phase, and I personally give it fair value of about $4 a share, and I'm going to show you why in my opinion. The debt has been slowly coming down, as we see over the last several quarters here, 35.7 million down to 33.7, 31.8, sub 30, 27.8. So the debt has been consistently decreasing for about 4 or 5 quarters straight. Look at the cash on hand as well. 9.2 million, 17.8, 23, 32.8, 33.5. So the company has a good amount of cash on hand, and also, even though the free cash flow is technically down here over the last couple of quarters, we can see it's only positive 260K. This time last year, though, with almost about 8-9 million more debt, look at the free cash flow was down here at about minus 3.25 million. So the company flipped the cash flow year over year now, went from negative to positive, and cash on hand went from 9 million to above 33 million. We also have assets outweighing liabilities. So if we look here again, total assets minus total liabilities yields total equity. And we can see that technically it was dipping down here consistently, going from 155 all the way down to 120. Now the last 2 quarters slowly started to inch back up. The book value per share went from 167 down to 126 and ticked up just a couple of cents here to 128. But in my opinion, I'm personally not looking at the book value per share. I am looking at the quote-unquote fair value that I personally look at here when I look at some of these companies. I'm going to show you real quick how we do this again. And again, this is just my opinion. But we can see here, total equity, we'll call it 125 million. Debt, 28 million. So now we subtract the debt from the total equity, and we're sitting here at what? Maybe like 97 million. Now we come back here and we look at the revenue that they brought in last year, 344 million. So now we're sitting at, what? We'll call it like 430, 435 million. And you can see that net income was a loss of about 39 million. Now I understand they turned it around, so we can potentially reevaluate moving forward here towards the tail end of 24. But right there, that quick little arithmetic, in my opinion, puts the quote-unquote fair value of this business at roughly the high 300s or potentially about the low 400 million mark. As you see, current market cap 285 million, which would indicate roughly about a 30% move here to the upside, which would equate to about a $4 stock. And in my opinion, I think that's why it immediately spiked up and almost got to 5 and then came down to retest. You can see it paused right there again at that trend line of about 3 3/4 and then broke down into the wedge and now potentially climbing out. So in my personal opinion, I give fair value of HNST at $4 a share, which of course, as you see, from about 290, as we said, is about a 33% move from this point. And also, if we pull up some statistics here on the company, we can see we have no PE, right? Because our EPS is negative. And we look at the price to sales, we can see we're back sub 1. It was sub 1 for a while, but also was above 1 at some point. So in my opinion, below 1 could be viewed as undervalued. Price to cash flow was up here in the higher teens. Now it's down here at slightly sub 12.5, which could be viewed as a discount as well. Price to book is sitting here, we'll call it 2.25, but we just were above 3 and we're at even 2.5 even before that. Now, technically, obviously, before that, we were trading at a lower price to book ratio, but remember, the company was consistently this whole time during this period here, the company was consistently reporting wider than expected losses compared to what Wall Street was anticipating, right? So they were beating up the stock even though the revenue was steady. Then you can see the last couple of quarters as the EPS started to come in and correct itself, all of a sudden the stock was trading 2.5, 3 times book, right? So now we recently pulled back. We're currently sitting here at 2.25 book, but even if we get up to above 3 again, That's what I'm saying. You could probably, more than likely, in my opinion, make a pretty decent percentage return in HNST, especially if it continues to stay in this rebound phase, maybe over the next 1 to 2 months. If we look at our return percentages here, we're all moving in the right direction for the most part the last quarter. The gross margin percentage, we can see almost touching 37%. That's the highest it's been going back the last 6 or 7 quarters. We can also look at the operating margin percentage. Yes, it did go from positive to negative back down here to about 0.9%, we'll call it. However, you can see before that was significantly worse. So we're in potentially the turning point phase of this business right now. The EBITDA, again, earnings before interest, taxes, depreciation, amortization, we can see it was negative double digits here, even single digits at one point, goes positive 2.75%, and then basically comes back flat, slightly negative for the last quarter. But again, in comparison to where the stock has come from, this, in my eyes, is a very big improvement. Net margin percentage we looked at before was negative double digits, down as low as minus 22.5%, climbs back up positive, and then just goes back slightly negative last quarter to 1.6 million. But I want to show you here as well, if we compare this recent quarterly report with 1 year prior, we can see 83.84 million, lost 18.87 million, which is a net margin percentage of minus 22.5%. Now, 1 year later, year over year, we can see revenue is up roughly about 2.5–3 million, going from 83 to 86 plus million. Look at the net income, minus 1.4 million. This time last year, they lost almost 19 million, going from negative 22.5% to minus 1.6%. So in my opinion, this company is doing everything right in the moment to turn around the profitability, while at the same time not really eating into any advertising or marketing dollars. They're kind of maintaining their accounts receivable levels, and that's why, in my opinion, I think that the stock should, in my opinion, continue to grow here from this level. The inventory turnover was bouncing around, got up to 2.8, started to dip down to about 2.5. Now last quarter, you can see 2.7. That's the second highest it's been going back the last 6 or 7 quarters. The asset turnover, again, how much revenue the company is able to generate off of said assets on its balance sheet, we can see we went from sub 1.2 up to over 1.5 and have been consistently climbing now, 1.56, 1.69. Our debt, as we looked at, was slowly coming down here for the last several quarters. So all of our debt ratios here, to assets, to equity, and on the long-term side as well, all of our debt ratios are heading down in the right direction. We don't have a dividend. If we look at earnings, again, you can see the EPS misses and the wider than expected losses were, in my opinion, the reason why the stock got taken to the shredder. Got it brought all the way down again to $1.06. Since then, we have 3 very healthy beats here on the EPS side, even going positive here for Q4 of 23, and now expecting, look at these tight losses. So if this company is able to keep these EPS losses either in line or potentially positive, as they did in Q4 23, that is, in my opinion, going to help propel the stock up to $4 to $5 a share, if not even higher down the road. Because again, I said, in my opinion, my personal fair value of the business is about 400 million. And even if we go 1.5 times that mark, we're talking about a market cap of about 600 million, which is potentially about 100+% move from this point, which would bring our stock price to about 5.75 to potentially $6 a share. And look at how steady this revenue has been coming in, just consistently increasing. Again, slight dip here for Q1, but we can see that Q1 seems to be their lightest quarter. Then we're consistently increasing for the most part quarter over quarter, and more importantly, increasing year over year from where we were. And you can see that the company is forecasting steady, continued, stable growth in revenue moving forward throughout the rest of 24, potentially going into 25. If we switch over annually as well, we can see it was rough coming out of the gate for HNST. However, the last 2 years have been above analyst expectations on the annual revenue side, and you can see that revenue expected to slowly and steadily keep climbing above 360 million, almost 378 million, above 400 million, and then above 4.25 million going into 2027. And if we stretch out, we can see that the company is also expecting annual positivity by 2027. But in my opinion, based on how they recently turned around the EPS losses just over the last couple of quarters, I actually think they may come in ahead of schedule, which in my opinion will further yield even more positivity and more growth in the stock price. Also, I want to show you the forecast here. We can see that we currently have 6 analysts covering this situation, 4 giving it a strong buy, 2 giving it a hold. Lowest price target is $3, which technically is a couple of cents higher than where the stock's trading right now. Average price target of these analysts, about 4.5. So this is why I'm saying we do have some serious growth potentially incoming. And even if you want to play it for the short term, and let's just say hypothetically next quarter they come out, they beat on the top and bottom line, stock pops to 4.5. Yes, it was short, and you may want to be in and out just within a month or two, but from a percentage point, I mean, you're talking 40-50% gains right there. So I feel personally there is money to be made, and that's why I always say one of my personal rules, follow the money, follow the revenue, and not only has the revenue been consistent, but now they turn the EPS losses around. So that's why I think, in my opinion, I think we're going to get back to this mark of about 3 3/4, and then you have the fib at 393, and then we have earnings due out basically kind of the mid-August, first week really, but we can see estimates of a loss of about 4 cents a share on 87.33 million. So in my opinion, I would give them the benefit of the doubt, and we could potentially come down and retest this 246 and then kind of rally up going into the earnings. And then that's why I'm saying, in my opinion, if they beat again, especially on the EPS side, I think the stock's going to pop up to 4+. Let's switch over to stock charts real quick. I'll let you guys go. And we can see that the RSI, again, dropping down into this wedge. It broke the 50, it broke the 50-day moving average, came in, was trying to fight for the 200-day, ended up rejecting, tried to retest 3 times, it looks like actually, riding the bottom Bollinger Band, and then we have the tightening of the Bollinger Band, which I said, in my opinion, usually indicates that a big pop or a big drop is coming, and what was taking place, the stock was in this longer-term descending wedge for a couple of months since March earnings, and then we can see, boom, wait, was it from earnings? Yeah, from earnings. And then we can see, boom, we popped out, we got above the 50-day moving average, and we have a current bounce off of the 50-day. 282, stock came down to 279, and then has been bouncing higher since then, hit a high of 294, currently sitting at 290. We have about 20 minutes to go before the close. RSI was down at the benchmark of 30, now spiked up to north of 60. But in my opinion, I think it actually takes the next leg higher, because not only did we have the technicals lining up, not only did we also have this kind of gap fill back to this high, but also we had the catalyst come out as we approach the apex boom. That's why I'm saying I think personally we take the stock above 3 here in the shorter term. And then again, if they want to pull it back and retest, that's entirely up to them. But we could also see, look at how flat that MACD was. And then boom, just started rising and climbing off of those technicals. So I like it overall, and even switching on the longer term time frame, we can see we pulled back here 245, exactly basically to our 50-day moving average, and then we had a nice big candles coming up here, potentially getting us back again to the mid Bollinger Band here, 324. In my opinion, that's probably the next stop that it's going to. And we can see that the MACD was selling off bigly and pulling back. Now you can see that flattening and potential curling now coming off of this recent move. So in my opinion, over the next couple of weeks, I do think it keeps going. But I wanted to show you as well, RSI on the weekly, about middle of the road, 50. I want to show you, look at how the stock has been performing. We can go back here to November. Excuse me. We can go back here to November of last year, and we can see, look at the tightening of the Bollinger Bands, and then boom, that's when the explosion took place. And then we kind of come down, consolidate, we flatten out, just kind of hang out at the mid Bollinger Band. Look at the tightening of the Bollinger Bands, and then boom, we have a pop up. So, you know, this is why, in my opinion, I like to look at the Bollinger Bands as well. I know there's like 1,000 indicators that, and everyone uses this one and that one. So obviously, to each their own. Whatever you're seeing success with, just keep on going with it. But again, this is just personally the way I look at it. But I just wanted to show you, again, you can see the tightening of the Bollinger Bands back here in the middle of May. And then that's when the stock starts to sell off and reject and start to pull back. Then you can see the tightening taking place again just about a week ago. And then boom, you can see the pop coming up and out. So that's why I like to pay attention to some technicals as well. I understand the channel stocks by the numbers, and I always look at a lot of the fundamental metrics. But again, we have to take the charting into account as well. Look at the RSI, check the VWAPs, look at the moving averages. But overall, in my opinion, this company has been growing pretty nicely. And the turnaround on that EPS side, I think, is the main catalyst, mixed with the steady, stable, growing income. And now they've developed that loyal customer base. So I think it's just only going to get better from here. And the fact, again, that it was so overpriced out of the gate and then got completely beaten up and smacked up. And I know you may feel like you missed the bottom, but again, we're never going to catch the absolute bottom. We're never going to catch the highest of the highs on the sell. But the fact that the stock came down to $1, ran up to about 5, and then pulled back about 50% of that back to 2.5, and then had a slight bounce. Actually, in my opinion, I view that as a decent positive, not as a negative. And I understand that you wish you may have wanted to own this down at $1, but even here at sub 3, as we just laid out, you may not have missed the big rally that could potentially be coming over the next couple of quarters or the next couple of years, even if you're able to hold it long term. But I'm actually going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky, they're volatile, they are very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for your time. Have a good weekend.